the housing outlook looks great. Prices are going to steadily rise. So affordability, Stuart, what does that do from an interest rate perspective? What are you hearing out there from an interest rate perspective on what's going to happen over the next 12 to 18 months?
I think rates, most economists are thinking that rates are likely to increase a little bit. They've been at, obviously, as you know, Larry, incredibly low rates this year. I don't think that's going to be able to be sustained indefinitely, but rates may increase a little bit up into the low threes on a 30-year fixed rate mortgage, which is still extremely low by historical standards. But I don't think there's anything to be too concerned about. I think that's still very low and it will encourage buyers. But you also have very low inflation, and inflation is kind of the enemy to interest rates. And at this point, inflation's, I think, below 2%. It may go up a little bit, maybe up to 2%, but not enough to really impact rates. I think as the economy improves next year, and again, we've got the vaccines start to get widely distributed. I mean, we have herd immunity starts to kick in and so forth. And we also have tremendous consumer pent-up demand. We've had savings rates by consumers this year have been at 17%, which is the highest on record. Wow. Because obviously they're not spending money on restaurants and travel and so forth. That's going to be unleashed at some point, maybe more the second half of next year. But that pressure will tend to increase rates a little bit. But again, I don't think anybody's expecting rates to get up, north of 3.5%. So I think, I think we've got low rates for the foreseeable future, certainly.
So you don't see, even if rates tick up a little bit to low threes, which is still extremely low, you don't think that'll impact anything with values of homes or listing prices or anything like that?
I don't think it will have much of an impact. I mean, I think you have to offset that with the fact that the economy is improving, jobs are improving. We'll see more of that, particularly as the year progresses next year. Again, we've talked about the millennials and the demographics, which are in favor of housing, certainly for the next 10 years. So, a significant uptick in rates, if they were to go up to 4% or something, that may have a more of an impact on home sales. But people aren't expecting that to happen. And again, the other factors are going to continue to fuel that housing demand. And with the pandemic effect, and people can live where they want to live and so forth. So I think there's a lot of positives. There's not much negative to damper housing right now.
So Dan, thanks, Stuart. Dan, going into next year and into the winter months, do you see, outside of the trends of home office and gyms and things, do you see any trends from how people are buying or the strategy from a buyer or seller? Anything different there that we can alert our customers about?
Well, I think there are some underlying sort of mini strategy or mini trends that are too new. They're talked a lot about, but they're sort of too new to be confirmed. Things like homes with more than one home office, those types of things where people are anticipating more home office work. And it is true that those homes probably get a little more activity, those that can have a clear office space to do that. But I think for the most part, because inventory has been so low across all markets and all price ranges, it's been pretty steady. So I think that's good for all parties, all sellers. It does flow price-wise. So the most activity, the most value increases, the under $250,000 market across the state, not just for Southeast Michigan, has risen about 10% plus in value this year. That middle market, 250 to 500, is about a 4% rise, and then over 500, the luxury markets, is a little less than 4%. although you'll find that the number of luxury homes sold above 500 this year may be the best ever, or near the best ever in terms of Michigan, that's more a function of the fact that there just are more of those homes available for sale. The inventory is more plentiful at the upper end than at the lower end. And you'll see that home sales at the lower end this year will actually fall behind by a decent margin prior years. That's not because of lack of demand, that's lack of supply. There just aren't enough of those homes. And builders are trying to catch up, but they just can't build fast enough. New construction's expensive. So that is a way of relieving the inventory pressure, is building new homes, but that's a slow process. That's not a fast recovery.
Sure.
Yeah,
I was just going to say, add another segment of the housing market that is really doing well is the second homes, vacation properties. We're certainly seeing that up in northern Michigan and Traverse City and so forth, where people maybe they've got a second home in Traverse City. They're saying, "Hey, I can work from wherever, so I might as well move up there." And that vacation home becomes their permanent home kind of thing, permanent residence. So we're certainly seeing that a little bit of a trend in that direction as well.
Yeah, I think we'll have a record year in Northwest Michigan, and the difference will be an increase in movement, not just from Detroit area, but Grand Rapids, Chicago, Indianapolis, even as far as St. Louis. It's not a fire hose, but it's a pretty fast moving hose of activity. In fact, there was an article, I think, in the news this morning about that same thing.
Excellent. The other piece to that, Stuart, you mentioned earlier on that savings rates are increasing. I just want to make sure everybody's aware that savings rate, they are increasing for sure. But you don't need to use all of that for your down payments. There's some great mortgage programs, FHA, conventional 3.5% down. Mortgage insurance is relatively low, or there's some other alternatives to mortgage insurance. There's our state bond program, MISHDA, that allows, depending on a down payment assistance program, if you qualify for that, you could get in for as little as 1% down. So what's great about that right now is savings rates are increasing. You don't need to use all of that. You can save it for a rainy day. You can save it for home improvements. But that is the great thing about what's happening right now is interest rates are low. Down payment programs are such that you don't need 10, 20% to put down. And not putting that extra money down with how interest rates are so low, it doesn't affect your payment too much. So just a great time to buy or sell